Well, given the carnage we witnessed in the markets today, we have a lineup of experts today who are going to talk about the stocks that you need to watch out for in tomorrow's session. To assess the overall macro picture for the Indian equities, we've got Sakti Siva, head of Asia Pacific and Global Emerging Markets Equity Strategy at Credit Suisse. On the fundamental side, Varun Goel, head of PMS at Karvi Private Wealth, joins in. And to talk about the technicals, we've got with us our very own Ashwini Gujral, fund manager at ashwinigujral.com.
Let's get you some global opinion, and Sakti Siva is right here with us. Sakti, you have around 2,000 investors attending this conference which you recently hosted. What is the sense you're getting towards Asia as an investing destination, and in particularly India?
We find actually, we do a survey on the second morning, so today, asking clients what are their favorite markets and their outlook. So generally, we find investors are cautiously optimistic. Most investors seem to be looking for a 10% return. But interestingly, India is actually one of the markets that they think will underperform. So most investors actually are saying that they are actually underweight India.
Ashwini, just wanted to get in your perspective for the equity markets and how you think traders should look at positioning themselves on the Nifty come tomorrow, because one never knows where this volatility is going to lead us.
Well, it's very clear where the volatility will lead you, because it's always leading you on the downside by the end of the day. But, how you need to play on the short side, that's a matter of tactics. It's not a matter of prediction. Chances are that if you want to play on a positional basis, you need a bit of an upside so that, the market does not whipsaw you. On a short-term basis, it still remains weak. So any kind of 40-50 point rally can be used by day trading type of public to go short on the market. But on a more positional basis, maybe you need a 100-150 point type of Nifty rally to go short. But this is a bear market. It's very clear on most parameters, which is, most of the market trading below 200-day moving average, or the market trading, 10% below its highs. Whichever way you look at it, I think it's a clear bear market, and medium term you should expect 5150, 5200 to come in.
That's correct. Even if you look at the Nifty intraday chart, you would see that the moment it went, or the Bank Nifty, the moment it sprang in the green, the bears actually took opportunity and fresh shorts were seen, and that's how in the last hour of trade. But more from a fundamental point of view, Varun, how did you look at the turnover data which came about? Looks like almost nudging at 3 lakh crore. BSE cash and NSE cash remains around 15,000 crore, but it's the F&O side which is swelling each day, and almost 3 lakh crore to 2.5 lakh crore is becoming the new norm. Just about a few weeks back, we were barely clocking 2 lakh crores.
Well, I think there are definitely a lot of short positions in the market. Definitely with the way political events have been panning out, I think markets are taking upon that it is very, very likely now that the elections happen in this year, and I would tend to agree with that view. So definitely we are in for some short bouts of political uncertainty. Even if the current bout of uncertainty gets tided over, I don't think the economic reforms that we're really talking about can go further from these levels. So the best that the market can do, best that the government can do, is to continue with what they've announced in the last few months. I think even that would be achievement in the current circumstances. So definitely I think another 5-10% kind of downside in Nifty is possible. From a portfolio perspective, of course, risk management would get extremely critical, and what stocks and what sectors you are invested in at this point of time would become extremely crucial.
Varun, do you think that this would be a good opportunity to bottom fish in some of the candidates which have seen deep cuts, the likes of Jayaprakash Associates, Bank of Baroda, Tata Motors?
Well, I think definitely some of the stocks are getting beaten ahead of the fundamentals. So I don't think a lot of the correction which has happened is purely because of fundamental reasons. I just mentioned a lot of shorts being built up, and it's difficult to say what level these stocks would bottom out. But I think there is definitely a lot of value. But whether we should wait for another 5% fall on Nifty and then start buying, or now, is that the that's the question. I would really wait for another 5% dip in Nifty before going out and buying these kind of high beta stocks.
But Sakti, do you think that India is still cheap, especially in the backdrop of the recent political uncertainty, even earnings growth not as much as one wants it to be? You think India can still outperform in 2013?
Well, we are rather confident that India could outperform for the second year in a row. Our call is largely based on valuations. We have a valuation model called the cheapest four, and India joined the cheapest four last year, actually on the 2nd of January, and this year actually about 2 weeks back on the 5th of March. And if you look at the period since 2000, this is the 15th time that India has been in the cheapest four. And in the previous 14 occasions, India has actually outperformed in 13 of those 14 episodes. So yes, there's a lot of macro risks, political uncertainty, earnings, and so on, but maybe to some extent they might already be priced in, which is why India has now joined our cheapest four markets.
So Sakti, given this abysmal backdrop, do you think India can better the returns that we saw in 2012?
That one I'm not so sure because, obviously last year India was up 25-26% in US dollar terms. I think, India this year should be kind of more of a 15 to 20% return. And obviously there's quite an improvement from what we have seen so far. I mean, so far this year, India is actually close to a zero return. So we are certainly looking for better returns, but maybe not as good as last year.
Ashwini, just wanted to get in your opinion then on some of the stocks within the auto space, particularly Tata Motors, biggest percentage drop since the 1st of February. How would you position yourself in this basket?
Well, Tata Motors, etc., 265, 270, that's the 200-day moving average. Chances are we'll move lower than this. So, 215, 220 should be the next stop on Tata Motors. Bajaj Auto again has broken the 200-day moving average. So I think auto space is underperforming the market and should move lower, probably more than the market, than the average stock.
Varun, how do you compare the two large cap banking stocks, ICICI as well as SBI? SBI had a downtick at closing, but was relatively stronger than the market, just about flat. However, ICICI stood out 3.5% in the green. Do you think there's a floor on the valuation in both of these stocks around these levels?
Well, absolutely. I think the banks have taken the biggest hit if you look at the correction that has unfolded in the Indian markets in the last 2 to 3 months. And I think somewhere down the line, people will start realizing that some of these banks are extremely attractive from a valuation perspective. The only distinction that I would make here is between the public sector and the private sector, in the sense that we still don't see the comfort as far as the balance sheets of public sector banks are concerned. Although valuations remain extremely compelling, but we don't know how next 2 quarters are going to pan out. And I think GDP revival is going to be extremely critical to make sure that the NPAs situation doesn't really worsen from these levels. So I would still prefer to go with the private sector banking names because we have more clarity and more comfort in terms of the balance sheet quality. So, but definitely the private sector tier 1 banking names are a definite buy at this point of time.
Okay, so private sector banking stocks are clearly on the radar according to Varun. But Sakti, to bring it to you, you seem quite bullish on the Indian IT space as a whole. But after the January upgrades, hasn't valuation become a bit stretched, particularly for TCS? So do you think you would rather play the sector with some of the underdogs like a Wipro?
Yes, in fact, we are actually suggesting investors buy stocks such as Wipro and HCL Tech. These stocks, at least on our valuation models, the premiums are more like 30 to 40%, whereas for TCS, we actually estimate the premium to be as high as 180%. So certainly, we are suggesting that HCL Tech and Wipro are cheaper ways of playing this recovery in US corporate capital spending, and also the recovery in earnings revisions that we are seeing in the Indian IT space.
That's correct. Wipro was one of the bright stars in the market today. But Sakti, other than the IT sector, what are the stocks you like in India on the same rationale?
Last year, our top pick was Tata Motors. This year, we've trimmed a little bit on Tata Motors because it was a strong performer last year, but it's still one of our top picks. We also like Reliance Industries. And to play the potential easing cycle in India, including today's, we like stocks like Bank of Baroda.
Varun, wanted to get in your perspective on the overall telecom space. Of course, Bharti Airtel was your start of the session, but do you think that the underlying fundamentals for this sector continue to remain weak on account of the regulatory hurdles that some of these companies face? And do you think that the kind of move that we saw in Bharti was only a flash in the pan?
Well, I think if you look at the macros of the sector, they are definitely on an uptrend. I think regulatory uncertainty is slowly going away. I think once we have more clarity in terms of the spectrum fees and on some 3G related issues, the sector should continue to improve as far as the financial health is concerned. I think the competitive intensity will come down over the next couple of years. We've already seen pricing power returning to the sector as a whole. I think last week one of the top 3 players did take tariff hikes, and I see that trend continuing over a period of time. So I think overall as a sector we would be bullish on the telecom space for the next 1 year. But I think there could be short-term uncertainty because of regulatory events, and one would look at buying into the sector at those times.
Pull up the intraday chart of Bank of Baroda, Shakti Siva's top pick. It was an interesting trade pattern. The stock was down almost 5.5% in trade today, but tried to recover some ground in the last 20 minutes. Ashwini, have you looked at the charts of Bank of Baroda? What's your view on it?
Well, the Bank of Baroda chart is just the same like the other charts, head and shoulders type of pattern, and it's broken down today. I think from here easily 150 points on the downside is possible. The way stocks are coming down, 500 to about 550 on Bank of Baroda is clearly likely.